Hello, this is Ronnie. I'm back here with a clip taken from a long video that I just finished to record for my subscribers. I'm leaving the option for my services at 50% off for the first year open, and I'll be providing further details after the clip ends. So if you're interested, please stay on. I'll be talking to you again at the end of the clip. I would like you also to read carefully the disclaimer that I'm going to put up now, so that it is clear to you before you go ahead and watch the video. This is just a standard thing. Okay, we have the gold bugs index here, and I'm going to look at some long-term ideas. Of course, there are no certainties, but long-term ideas here. That's the weekly, and we had what could be an A composed of 5 legs, which would suggest that what's happening here since the bottom jump here in 2016 is basically a B. Okay, and it could still come down sharply once the B is done. It's just an idea. Okay, right now on the weekly we are seeing a pretty strong decline that is shaping up as potentially something quite impulsive. So we got to pay attention to this. Here's the weekly. I'm just opening it up here. Now my reading of a complex B, yes, would take this actually as an A. So it would not suggest that we go and break the floor here. By the way, breaking the floor here will be definitely extremely important and quite bearish. Okay, breaking the floor here. Right now we are working with our 1, 2, 3, 4, 5 as the first building block of whatever pattern is going to emerge here. It's either going to be a 1, 2, we're going up in a third wave, or that's going to be an A, B, it's going up in a C, which probably be knocked down by this resistance and then come down, because we are in a very large scale triangle forming a B, preparing for an eventual collapse. Okay, again, it's just an idea, no certainties. Okay, but you can see the steady decline. This is on the weekly. Let's flip to the monthly, and you will see that this is pretty serious, and you can see the dive on the monthly. You can see the dive. It's got to stop here. It doesn't stop at 210. Situation is not looking good. It's not looking good for the for this market. Now this is the 60 minutes of the HUI, the gold bugs index, and it's a wave count that I would think is okay. It's not fantastic. There is a little bit of problem of proportion here. With this one is not a problem. That's a 1, 2. That's fine. The problem is a little bit here. What do we do? Is that a 3, 4, or the third ended here and that's a 4, and that's in fact a 1, 2, 3, 4, 5. But already this morning it's lower. So this is going to get clarified. It's reaching close to a point where I think we're going to have a bounce. The bonds that often move together with gold and silver, the bonds. Yes, the bonds are reaching also an important support, especially the German bonds. So we might see quite a bounce from this level. That might not be the last word of the bears in this correction, but that's my expectation at this point. We are reaching a point where we're going to get some rebound. Now this is the chart of XAU. That's gold and silver sector index, and we have been working with this being an ABC. Fine. We have left a very general considerations at this point, and we treated this as a 1-2. We were looking at the third wave to develop. This is not out of question. Right now this is still feasible, but we have to be open-minded that things could of course shift and present a totally different reality from the one that we are hoping to see. This is now the daily, and it ran down quickly to the 200 moving average and to the other side of this upsloping channel right here almost. That we have support coming up here. And as I said, this morning is already lower, so it's probably going to drift a bit. And again, support is coming up, confluence of the 200 horizontal upsloping line. We're going to have a rebound. Okay, we're going to get a rebound here. If not, and it continues to sink, that's very, very, very bad. That's very bad. It means it's probably going down there. Okay, going down there, it's not going to be resurrected very soon. So I'm going to show you here the chart of gold, and that's the monthly. I'm going to just explore some long-term ideas. Now please understand, these are just ideas. There is no certainty. I'm not here delivering certainties. I wish I could. I can't. But I'm going to show you a few things. You might like them, not. You do with this information what you like. But here it is. In the past, I've actually shared with you this idea. This is gold 100-year chart. 100-year chart. Okay, so it's a big deal. It's a big deal, and it is obviously log scale. Sorry, it's a log scale, as you can see. We're going back many years, obviously. And just simple reading would say this is 1, 2, 1, 2, 3, 4, 5, 3, 4. We are up in the fifth. Now the fifth, of course, could extend a lot. From a long-term perspective here, I would just suggest that $1,000, the price for spot gold, presents an important level here in terms of the development of the wave count. If it does break under the low here, which is slightly above 1,000, it could raise the prospects of potentially indicating the termination of the move that began way back here. Now again, it's possible it's not a 3-4, maybe it's something else. But if it does break under this level, that could trigger a correction that could go on for many years. Okay, so I think it's important it doesn't break this low, and it could sink back down here, and that could extend the correction that began way back here. Okay, how are we going to relate the correction here to the previous price action? I don't have a very clear answer at this point. I would just say that this appears to be forming a possible ABC. That could be an ABC. If it breaks down, that will be another ABC. So we will be in a bunch of ABCs here, which would obviously be bullish long term, as long as it doesn't break again the bottom here. Okay, I thought it's worth having a look at a 100-year chart once in a while to see a bit what's happening here with gold. There is an element of confusion, I would say. We are doing our best to have it on the log scale, but because it's stretching back so many decades, when it reaches this level, and you can see the next bar takes you to 10,000, it's quite difficult to find your way around in terms of relating it to today's prices. But that is the general structure that I wanted to show you, and that is our monthly scale, log scale of spot gold. And here we're just going back to 97. So what I was talking about there, I was talking about this level. Yes, it shouldn't break this level, and if it comes down and it breaks the recent By the way, look, we have an important support level coming up here. It managed to jump back above it on the log scale, and it's important that it doesn't come back to break this low. Okay, if it breaks this low, it is telling you that it's going to sink into, at best, into lateral movement here, and it is probably in the business of tracing some sort of longish lateral movement before it will be ready to take off. So that's the monthly. Let's go to the weekly. And we worked with this being an ABC. So far, from what I can see, we can still continue to work with that. Yeah, the decline is indicating that it is almost certainly going to continue to fall, but we don't yet see a meltdown, or we don't see a breach of very important support levels. No, I'm going to show you here. Now this is the weekly. That was critical. Do you see? It's an outside reversal. It rushed up during the week, took the stops, dived big, and that was almost a sure sign it's going to continue lower. And it did. You can see. Now on the weekly, it cracked the 10 moving average. There was support for quite a while, was resistance, as you can see, for quite a while. Now completely cracked that. And it is threatening to break even the support level, the first support level here, just under 1,800, okay, at around 1,790 or so. It is important that we find support here and we bounce back meaningfully. Otherwise, that's not going to look good for the bulls. That's 1, 2, 3, 4, 5. And we're coming down, and the wave count is not very clear to me. I'm not going to push a wave count. I'm just going to show you the options. And this is the daily, so it shows you the 10 is crossing the 50, the 21 is turning down. Major overhead resistance here pushed it lower. The wave count lent itself, as far as I can see, to this 1, 2, 3, 4, 5. But what is this? It's not yet full scale, an impulse wave, and it could possibly be this, that this is an ABC A, that's a B. It might come to do something like that without necessarily going back there, but it sort of will go sideways, and that should tell you it is preparing for the next drop. Okay, so that's going to be A, B, C, and then hopefully we see some strength manifesting here. Now here's the chart of silver. That is the monthly, and I'm going to show you also the chart of silver on a 100-year chart. Also this chart I shared with you some while ago, and again very interesting. I find it fascinating. In fact, going back 100 years, again, it's just an idea. Take it for what it's worth. Don't take it. Relate to it. Don't relate to it. Do with this information whatever you like. Maybe it will ignite some ideas in you, trigger some directions that normally you wouldn't have in mind because of this chart. That's already some feedback that is worthwhile watching here. So that is 1, 2. That is clearly extreme top. So that's probably the end of the third wave. That's a fourth wave that I presume ended here. It could have ended here as well. Okay, if it ended here, there is a possible case for a 1, 2, 1, 2, 3, 4, 3, 4, 5 top. Now, of course, some of you would laugh and say top in silver, absolutely out of question. It's going to soar. Well, I said to you, it's just an interpretation. It's perfectly possible that this is going to extend substantially. And what we are seeing here is not an ABC calling for silver to break back under 10. Under 10. Well, but the option is there. You can see why. You can see why. Yes, you can see the reason why. That could be taken as a 5-wave. We know that we have 5-wave rally right here. Yes, that could be a C inside an ABC that forms the B. So if silver goes and breaks the floor here, when you bring it when you come to check this chart, a long-term scale, it tells you, hey, wait a minute, this is probably a C, it's relating to this. Okay, would that in itself qualify immediately the top here as correct? No, no, but at least it gives you some sort of perspective, and it tells you that silver is not going to be ready to turn up very quickly. The process might be quite lengthy. Okay, so that's a silver 100-year chart. No, that is that is our now monthly silver going back to only 1997. Okay, so that is the 1, 2, 3, 4, 5 one interpretation. We had this coming down with ABC X ABC, and the climb here is taken as a 5-wave run, which I think is correct. We did have 5 waves. And here we suggested that this is an ABC probably complete. That's the second wave. We are going up in a third wave. There's nothing wrong about that. It's perfectly okay. It seems to me okay. Now, things will look very different if the deterioration now will accelerate. I'll open it so it'll become a little bit more comprehensible. So here, there is absolutely nothing wrong with this being 5 waves, taking it as 1. But you realize that if it breaks lower and it reaches, let's say, 14, it threatens to break the floor here. This will not be 1, obviously. Yeah, that will not be 2. And that will be a C. That will be a C inside what I think most likely would be an A, B, C. So very long term, if you remember, that will morph into your A. Remember that chart, yeah? That'll be your A, that'll be your B, and down it goes into a very big C. Now, we are far, at this point, we are far from having clear wave count to go by to declare that this is the right one. But this is worrying. Look, this is the monthly, and look, it's a bearish engulfing pattern. It went to the top, swallowed it, and then sank, completely trashed the bottom here, completely. And now it is sitting at the confluence of the 10 and the 50 moving average plus horizontal. That's silver. If this doesn't hold, and we see an extension of this fall in the next 4 weeks, that's really bad. That's really bad. Yeah, that's really bad. It will signal that it wants to test this level. At this point in time, I don't expect it. I don't expect it, but I must tell you, I've been really taken aback by the fact that silver has been so weak since it reversed it. It's been really very, very weak. Okay, let's have a look now at the weekly. And you can see a waterfall collapse, but reaching meaningful support. Well, at this point, we think it's meaningful, and we look up to support to show up. If that doesn't happen, that's very bad. Okay. We have our 1, 2, 3, 4, 5. So we're looking for lateral movement roughly from 20. Let's say 20 really extreme low registered here. This zone 20 to 20 and a half. We want to see it bouncing back and just spending time here consolidating and eventually taking off. Okay, I'm going to show you the daily. Why did I say that silver is so weak? Well, you have to tune yourself to the movements in the chart and especially to the corrections. When you have an impulse wave, it's easy to see. It's full of enthusiasm, it's full of dynamism, but the secrets lie, in my opinion, in trying to assess the strengths of the corrections. Whether you go up or down in the market, that's where the secrets lie. And here you can see that after this big break, hardly any correction. That tells you it's very weak. It's very weak. And when it went back to test the floor and just broke, it's like one-way street. It continued. the weight of selling here knocked it down completely. Not to even mention that it completely shattered the support here that held for so many weeks. Like it sliced it now, boom, like you slice butter completely. And it didn't even make the effort to go there. It's not that it didn't fancy making the effort, because it couldn't. It couldn't. The selling pressure was like, yeah, no way, just look. And that's worrying for, I think, should be a worrying sign for the bulls at this point, definitely. So the next critical level is coming up here between 20 to 20 and a half. I do expect these to hold 20 and a half. I do expect these to hold. I do expect a rebound, ideally, as I explained, something like that. If this doesn't hold, it continues to look like there is no real correction coming, it continues to sink. Ooh, well, this is coming. Be careful. My website, the homepage is right here. It's Wave Mastery, www.wavemastery.com. Yeah, wavemastery in one word.com. That takes you to the homepage. You can scroll down, look through some things that I've written here, some recommendations from past users and current users, and that is essentially the offer currently open only to first-time subscribers. Okay, so there is the daily service, daily videos that are preceded by a trial, so you can take the trial for 1 week, and at the end of that, if you're happy, you do nothing, you go on to the plan of half price. Essentially 79 presents half price of the normal price, and that will be good for 1 year. That means 12 payments of 79. If you want to watch just the weekend videos, then you go for this one, and it does give you access to the weekend videos, and I often also insert a video as a bonus midweek, just to keep you on track, to see a little bit where things are moving, because sometimes 1 week of full price action is a lot, and the wave count can change, especially if you're a short-term trader. You really want to know what's happening. So that is essentially the situation. If you decide to go, for example, for the daily videos, you click here, it takes you to the page where it explains to you, you should read that, it explains to you what is covered, etc., etc. If you like what you read, you click here, subscribe. It takes you to PayPal, because my paying system is through PayPal, and you pay through PayPal. You can see you have the trial at $9.99. That's for the first 7 days. As I said, if you like what you see, do nothing. It just goes automatically. If you don't like, you can cancel. Or if you don't know how to cancel, or you have any doubt, you have any question, you can write to me, of course. Once you go through and you pay, you come back, PayPal will send you back to my website to fill in your profile details, choose your login, and once you do that, you will be led automatically to the page with the links to the various videos classified by date. If at any point in time in this process you have a problem, things are not going as I'm describing to you right now, all you have to do is just contact me and I'll help you out. That is essentially it. So you'll have 1 week to look at things. I would like to just spend a minute about the website itself. I have written here a few articles. Is this website for me? You can go through that one. Psychology and trading, trading and the arts, why join? Yes, each of these articles could perhaps help you to see how to relate to my website, but there is no substitute, in my opinion, to actually take a trial. You know, you take a trial, and I want to say another thing. You take a trial and you can't make up your mind. You want more time to think. Fine, I understand that. Then you cancel, but then you are not allowed to take another trial. Please, I want to be very clear about that. There are people who abuse this, and it's really not right. You're not allowed to take more than one trial, okay? A trial is a trial. But if you're interested, after you took a trial, you're interested to come back, you can still benefit from the low price for the next full year. But you have to write to me, and then I will send you a special link without a trial. And if you join, then you're going to go immediately onto the reduced price plan for 12 months. Okay? If you take another trial after you took already one, I am going to have to cancel that and refund you. And if you do that 2 or 3 times, I'm just going to blacklist you, because there are people who have been doing it, and I'm afraid this is really absolutely not right. This is subscribe here. Use subscription. Once you are logged in, you will see this one highlighting you daily service videos or weekend service videos. Yeah, it will show which one you really have the right to access. The daily service videos, to be very clear, they cover the weekend service videos, okay? So you don't have to subscribe to both. The daily covers everything I do. The weekend, of course, is more selective. Now, I have here resources. There are chart galleries right here, chart 1, 2, 3. There are plenty of charts here that give you an idea how I go about subdividing various market action here. I covered a lot of markets, and you can see there is history here that could be very interesting for you to just go through. Let's see, platinum, for example. Yes, that's 1973 to 1978. If you click right on top where it shows you the hand, the chart opens up big. You can print it if you like. Here's an example of platinum, April 1980. 1, 2, 3, 4, 5, and then the huge correction that followed after that. So there is plenty for you, whichever market you're interested in, the financials, commodities, precious metals, etc. Okay, so that's chart galleries. Then useful links, as the name implies. Yes, recommended reading list. You have a long list of books here that I've read over the years that I found very interesting. Of course, I have many more books that I would like to add. It's just a question of time. I don't always have time to update this one. But the books that you find here did help me in the beginning, and still the information here is very valuable in these books. For example, Kroll. I don't know how many of you heard about Stanley Kroll. Stanley Kroll was a really imaginative fellow trader that wrote very well about his own trading and in trading in general. I learned a lot from these books. And of course, if you haven't heard about Reminiscence of a Stock Operator, you should get this book and read it. You will not regret. This is a book that most traders, I think, have come across and read. It is very interesting. And as you go down the list, you will see if there are things that are of interest to you. Of course, go ahead, get them. Some of them are even available online for free as a PDF. Check that. If you have questions about that, you can even contact me. Here's the contact us, and you put your name. Please make sure you give me the right email address. Message, simple maths, submit, I get it. You'll hear from me. I'm based in Belgium, so if you write to me from Australia or from the US and I'm having my rest, do not be surprised if I don't react quickly, okay? Normally within a day you will have a reply from me. I check my email fairly regularly. So that's about it. Hope to see you visiting my website. Hope to see you taking a trial. If you have any questions, again, don't hesitate. Get in touch with me, and wishing you a great trading week. Bye now.